Today, we want to talk all about the FOMC meeting that just went down yesterday. There is potentially one more rate hike coming by the end of this year, which is causing the market to have quite a bit of uncertainty again. So we'll discuss exactly what changed from this FOMC meeting with the last one, and we'll discuss all the probabilities that we're looking at in terms of the last rate hike coming in by the end of this year, as well as when will rate cuts actually happen. And there's actually a bit of extension that is causing a bit of uncertainty in not only Bitcoin, but all markets. And also, by the end, I'll also give you guys my current view on Bitcoin's price and the overall crypto market's prices. Welcome everyone that's joining this live. If you are new here, my name is Virtual Bacon. And on this channel, I share my views on market trends and investing strategy to build wealth in crypto. During yesterday's FOMC meeting, the expectation going into the meeting was that there wasn't going to be a rate hike, and this did turn out to be the case. So the Fed decided to not hike rates, which means it stayed right at the 5.5%. That's the same point that we've had since July. Now, the slightly more hawkish stance that was given was that they're signaling potentially one more rate hike coming this year. Now, first of all, let me show you a little bit of background of why this even matters. So these rate hikes or interest rate hikes is used to combat inflation. So as you guys know, inflation has been really a big problem for the past 2 years. And since we've started hiking rates from the Fed, inflation has been finally slowing down. And this is because higher rates makes borrowing costlier, which helps reduce consumer and business spending. And then eventually it cools down the demand and inflation. And on the other hand, it also encourages saving. So higher interest rates make savings more attractive than spending. So it will reduce overall demand. Now, how interest rate hikes also impacts the stock market and Bitcoin and volatile assets is that number one, when rates are increasing, this increases the borrowing costs that people can take out from financial institutions in order to invest. So this directly leads to buying demand for all markets. And number two is that bond prices will also fall when interest rates increase, which causes further capital loss for bond holders. And then there are also certain effects that will happen to currency exchange rates, which also attracts more foreign capital. And in terms of the cryptocurrency markets, so Bitcoin's value can be highly influenced by all traditional financial markets. So when the Nasdaq, when the S&P goes down, usually Bitcoin goes down as well. And as higher interest rates leads to higher borrowing costs for investing demand, this also leads to usually decrease in cryptocurrency prices. Obviously, altcoins will follow Bitcoin, so it becomes a waterfall effect. Now, it is worth noting that cryptos are usually seen as high-risk, risk-on assets. So the direct impacts from borrowing costs, from bonds, from yields, are not as apparent for crypto prices. The most important factor that drives crypto prices is speculation. So this is the point that I have made in July's video when I talked about Fed rate hikes last time, which is that the markets are always forward thinking, especially in crypto. So even if even if the current interest rates are still high, as long as the market knows the exact plan that's coming out of the Fed and they are expecting the rates to eventually come down, then prices will rally. So even if rates are still high and it's still very costly to borrow money, as long as people know eventually prices will go up, they will try to price that in and buy up assets early. And especially this is true for crypto assets. Now, on the other hand, if the market is already expecting a more dovish stance coming from the Fed, but they go ahead and turn around and introduces even just a little bit of uncertainty, then the market will react quite negatively. And this is exactly what's happening right after this FOMC meeting yesterday. So let's get into some of the expectations that people had. So last week before this, why is this so large? Okay, last week before this FOMC meeting, Bitcoin was seeing quite a bit of a early rally, right? It rallied all the way up to 27K. And because people were actually, all the analysts had a 99% prediction that there wasn't going to be a hike going into this meeting. So a lot of people were excited. They thought, this is going to be even more dovish than before, and they could potentially officially announce that rate hikes are over and they're going to officially pause. But obviously that didn't happen. So traders were increasingly confident that the Federal Reserve will remain at a stable interest rate for the remainder of the year. And this is why Bitcoin even reached 27K. In fact, it got a little above 27K. Let's just look at the charts really quick. So here you see Bitcoin going into this FOMC yesterday was trading at 27.2. And it was the highest point since the past month. And this rally was also right after a kind of death cross pattern. So a lot of people thought, okay, the worst was over. And however, unfortunately, just a little bit of uncertainty was introduced in yesterday's FOMC meeting. And you see prices starting to come down again as people realize that, okay, the things are not as dovish as people thought. And we'll get into that right now. So the stance coming from the Fed yesterday was that, okay, interest rates, we're going to keep it at 5.5% at this meeting until at least November's meeting. But there could potentially be one more rate hike coming this year. So we have two more rate hikes by the end of the year, one in November, one in December. And more specifically, here are a bunch of Jerome Powell's speech. So there were some key takeaways. Number one is that in November, during the November FOMC meeting, there could be a potential government shutdown, which could impact the Fed's FOMC decision in November. So this was the first uncertainty, which was that even if the Fed wanted to pause rate hikes in November, they might not have the ability to do so in case there is a government shutdown. So if they miss this essential data, well, they'll just have to deal with it. So Powell said that if there is a government shutdown and it lasts through the next meeting, then it is possible that we wouldn't be getting some of the data that we ordinarily get. So this kind of introduces more uncertainty. Okay, maybe this is a chance for them to use to hike one last time. And he directly followed up by saying, okay, the worst thing that the Fed can do is to not restore price stability. And this restoring price stability part is not so much about hiking rates more. In fact, the most amount of rate hikes that we can get is one more. It's either 0 or 1 by the end of this year. But this part of restoring price stability is more about how long it will take before interest rates start to come down and rate cuts can actually happen in 2024. So we'll get into that right now. So he said a soft landing is possible, but not a baseline scenario. So remember in July's meeting, people were already trying to price in a soft landing and a rate cut to happen sooner than expected in potentially mid-2024. But it turns out this is likely not to happen. So here is more reiteration on the Fed's target. So why is this there? Here. Jerome Powell said the inflation is still well above 2%, which we'll show a chart in a bit. But the Fed is still targeting at 2% inflation after the rate hike cycle is over. So before inflation comes back down to 2%, rates will not be cut. So this is basically their stance. And Jerome Powell reiterated their commitment to the 2% inflation goal. Now, this is a bit different from July's meeting when the 2% goal wasn't so directly emphasized, and people were speculating that, okay, they could be just easing off and saying that, okay, 3% inflation goal is still okay. But this time around, the Fed came out and said, okay, no, we're going to target 2%, which means the rate hike cycle and even the pause cycle will last longer before rate cuts can happen. Okay, now let's get into a little bit of charts and look at inflation data and rate hikes data. So here is the US inflation rates, and we're pretty much only interested in the past 2 to 3 years because, as you can see, okay, rates were really high. Inflation rates were very high in 2021 and 2022. But how has it been going since this since interest rates has been raising? Well, here you see all of the data. So inflation peaked at 9% in June 30, 2022 during this data period. And ever since then, interest rates has been going up. And as a result, you see for the past year, inflation has been coming down from 9% all the way down to 2.97% during the June meeting. But something interesting to note is that even though it went down for 1 year straight, since June, there actually has been a little bit of a uptick again for inflation. So you see by July, it was 3.18%, and by the August data, it was 3.67%. So this introduced a little bit of worry to the rate hike cycles because even though it went down a lot, it did not reach the 2% target, and it seemed that, okay, the bottom was at 3%, but it started to rebound. So this is not good, and this is why the Fed really came out and said, we need to restore price stability. We need to target the 2% inflation target. So 3% is not enough. So this uptick, they want to completely kill this off, which is potentially why there could be one more rate hike coming by the end of the year. Now, last bit of data I want to show you is the next meeting dates and their expectations. So here is the Fed's calendar. And you see in 2023, we have just 2 more FOMC meetings. So the next one will be happening on October 31st and then on December 12th. So these are 2 more times that the Fed could come out and raise rates and give their whole speech about how they plan to take on inflation for the next year. So what's going to happen in the October and December meetings? What are the probabilities that we're looking at? So we can track all of the probabilities that all of the major analysts are saying in the markets using this CME Fed Watch tool. I'm just going to zoom down a little bit here. And you see a couple things to note here. This is the current rate that we are at. We're currently at 5.5%. And for the next meeting in November, people are pretty torn. So some people are even saying, okay, we could see a cut to 5.25%, but most likely this is not going to happen, which we're going to show in the more precise probabilities. But here we go. Yeah. So the first thing I want to show you is that, let me just highlight this. So in the next 2 meetings in November and December, here are the probabilities that are important. So around 68% of people, of analysts, are saying in November we're not going to have a new hike, but in the December meeting it's pretty much a 50-50 split. About 54% of analysts are saying no hike. 45% of analysts are saying yes, there will be one more rate hike. So chances are, by the end of the year, we could be expecting one more rate hike. So given that there are 2 more meetings. And here you see this data interpreted a little bit higher. So the chance that we are at a slightly higher interest rate bracket is about a 39% chance, plus even 6.5% chance, let's say. So about 45% chance that we will be higher at, we will have a higher interest rate by the end of the year, which is about 45% chance. So keep this in mind. And let me show you what these data look like in July. So remember, we also made an update video about this after the July FOMC meeting. And here you see, in July, the analysts were saying that, let me see if I can find it here. Okay. So in July's meeting, you see people were saying, okay, for September, 80% of people were expecting that there were not going to be any hike. But also you see in November and December, 69% and 66% of analysts expected no rate hike, and only 30 to 28% expectation for one more rate hike by the end of the year. So the chances were definitely a bit lower. Compared to right now, you see that this chance has significantly increased to 45% chance of a rate hike by the end of the year. So number one, this is the interpretation people had after all of the data were released, after the Fed's speech. And number two is that here, this data also gets into the probability for rate cuts. So here you see the highlighted from July, which were about total probabilities of an ease. So ease here just refers to rate cuts. So for interest rates to come down. Now, you see in the July meeting, here are pretty much all of the predictions that experts were saying that when we're going to see rate cuts. So you see, early 2024, chances were pretty low. There were about 45% expectation for rate cuts to start by the March meeting, by March 20th, 2024. However, by the May and June meeting, we already had 76% and 83% probability that rate cuts will happen and interest rates will start to go down, which leads to, way better market conditions. However, if you look at this same chart of probabilities for today, you see that under the ease column, for March 2024, there was only 11%. So pretty much not going to happen. Rate cuts are not going to happen in early 2024, Q1 2024. And you see these expected times from May to July of 2024 for rate cuts to happen. These probabilities significantly decreased. So only 28% chance for May, and then 45 to 63% chance that it will happen in June to July. And most of the interpretations from Jerome Powell's speech was that right after the rate pause, they are likely to take one whole year of pause before rates start to come down, before they introduce any easing. So this means once we get one more rate hike by the end of the year, there could be up to 1 year where interest rates stay at 5.5% or 5.75%, depending on if we get one more hike, which means that leads to at least September 2024, which is probably the earliest time that we could get a rate cut. So that's why you see these total probabilities here leading into the end of 2024. So the September meeting, November meeting, and December meeting next year, which is when we will likely see interest rate cuts start to happen. So we see 78% for September meeting, and then by the end of next year, 86%, 93%. So the market turned on this a lot just from July to September. Actually, these probabilities changed quite dramatically. So you see here in the last meeting, people were 99% sure that we're going to get rate cut happening in November, and 97% sure we're going to get it in September next year. So all in all, quite a hawkish shift coming from the Fed. And we can see this especially in the expectations for rate cuts. So before, people were quite, let's say, bullish that we're going to get a rate cut happening in mid to Q3 2024. But now, majority of people are saying we're going to get it by the end of 2024. So yeah, that's basically the interpretation from FOMC. And let's look at some of the current price performances. Obviously, coming from this slightly hawkish turn, and especially with the kind of bullish euphoria going into that FOMC meeting, you see large stocks, tech stocks are all dropping today. And Bitcoin, this already on the day, it's showing a downturn. We'll show the charts more in a bit. And here, I want to point you to a bit of kind of summary. So today, the Federal Reserve said higher rates for longer. The market is beginning to believe them. To back up the statement, Jerome Powell upgraded the GDP estimate for this year and next, also stated that inflation's target is at 2%, and this is the target that the Fed wants. It's not at 3%. Don't get your hopes up too early. So, unfortunately, markets are always forward-looking. We were coming from the July meeting, people got way too forward-looking going into the September meeting, and now they got kind of a hit on their head and probabilities started to drop, and that's why markets are starting to turn a bit. So all in all, is this going to have long-term effects for the markets? Not so much, because the real interest rate hikes have already been over. Majority of the cycle has been over. So rates are either going to stay the same or have one more hike by the end of the year. Is this a super huge deal? Not really. But just that we need to have way more uncertainty going into this period. And this is why from now until the end of the year, what happens for the next two FOMC meetings is still going to be quite significant, because we know we could have 0 or 1 more hike. So when this happens, and when will the Fed actually announce that, okay, we are officially pausing hikes now. We're not going to raise interest rates anymore. And now we are finally in the pause period. Then people will start to have way more positive sentiment for the market, and people will get into the mindset that, okay, the rate hike cycle is over. Now we're in the pause period, and people will bring up the kind of forward-looking sentiment a lot more and say, okay, now we don't expect any more hikes. That is out of the question. We just need to look at how many months before we start to see rate cuts. So that's a much better positive sentiment for the speculators to come back. And here is last bit of comedy relief I want to give you guys, how the economy works. So we are currently right around this stage where Powell is pretty much done raising interest rates, but a proposed soft landing is unlikely to happen. And if we have one whole year of rate pause at 5.5%, that's probably going to lead into some form of a recession. So this is kind of the period we are at. So look out for the next two FOMC meetings of what the Fed will, what their approach will be for this soft landing and how long this rate pause period will be before cuts actually happen. If cuts happen quickly, then, well, that will look like this, where we don't land too heavily and we go straight into lower rates, maybe in mid 2024. But if the pause is very long, then we will take a prolonged period and land kind of pretty sharply here. Okay, so that's it for FOMC breakdown. And now let's get into Bitcoin prices. So pretty interestingly, so I actually put in a short position on our copy trading yesterday. So if you have been following me on my copy trades on Fairdesk, is this even my account? Let me check. 1 second. No. Okay. I'll show you guys that in a bit. But essentially, a lot of euphoria coming from leading into this FOMC meeting, and here price peaked at around 27.2, but it failed to break above this previous swing high at 27.8. And you guys notice I had this. Can I bring that up? Yeah, here. I had this channel drawn before, so I think likely case for this mean reversion coming down to the downside of the channel. Now, we can also say that Bitcoin is starting to show a short-term downtrend, at least, with lower highs and lower lows. So that will look like this, where we have had lower high here, first lower low here, second lower low here, and then another lower high here. So you see, coming from this larger trend breakdown, right? First, we made a low below this previous low, but obviously this doesn't even count anymore. So the first low made was at 25.6, and then first lower high on the bounce was at 27.8, and this was a lower high because it didn't reach these previous highs at 29K. Then price made a new lower low at 24.9. And then on this bounce leading into FOMC, we made another high, but not higher than the previous high. So this, you see this peak here at 27.4, which was lower than 27.9. So now this is starting to show a downtrend pattern, right? So very simple. Uptrend, downtrend are just simply determined by higher highs and higher lows, and in a downtrend is lower highs and lower lows. And here you see quite clearly here we have lower highs and lower lows, and that's why I am expecting for Bitcoin to at least come down to revisit about 25, maybe 24K if we break below this low here. So this is why in the immediate short term, let's say 2 weeks, 3 weeks, probably a little bit more downside. It's not going to be very significant because I think in the long term, when did I mention this? I think in the last price live stream last week, I even mentioned this. So essentially, zooming out to weekly, even if this 25K support here breaks, let me just draw you this real quick. So you see, even if this 25K support here breaks, the bottom line that I have for Bitcoin is right around here on this wick, which is when we had a huge Binance FUD, when Binance was sued by the SEC and CFTC. So I wouldn't expect 21K to break on this wick, which means the expectation for kind of this short-term, medium-term correction for Bitcoin, I would say would be between 24 and 21.5K. So the average here will be around 23K. So let's say in this range here, yep, right there, in this zone, I will be heavily buying Bitcoin. So you see how even though we have this short-term price correction here, even if that leads a little bit lower, that's only about 5% into this range. So I wouldn't count on Bitcoin having a major downturn. This is just a short-term expectation, but wouldn't count it out for Bitcoin to come down to revisit this range. So you see there's actually quite a bit of order book pattern here that you can see with these candles here. And if you zoom out to the daily, that's going to be quite more apparent. So you see here, where do I have my brush? Yeah, nope, not that one. Here, right here, where we had sideways consolidation in June of 2020, June of 2022, when 21.5K was the resistance. And then here again, 21.5K to 24K was the consolidation range before price had a breakdown. And again, price consolidated below this level. Then up here again, about 2 months of consolidation between 21.5 and 24.5K. So this is why I am expecting this range to have a lot more buying power once Bitcoin's price comes down to revisit this range. All in all, 24K, I think likely to be revisited, but I wouldn't count for this range to be broken. So anything, let's say within 23 to 24, that's going to be a buy for me. So that's my stance on Bitcoin right now. Short term, most likely we're going to revisit at least this low coming from this short term, downtrend, lower highs and lower lows. But medium to long term, I think just a little bit lower, 23 to 24, that's going to be a buy. Okay, so that's stance on Bitcoin. And really quick, I want to show you guys my current right here. Yes. So in order for you guys to follow my trades, actually we have a copy trading campaign set up with Fairdesk. So actually I need to bring that up. Here. So I am preparing a copy trading video that's coming in very soon, will be released this week. But essentially on Fairdesk, this is an exchange that we're partnered with. I am set up as a copy trading profile here. And here on my copy trading account, I'm just going to show you exactly my trades here. So you see, yesterday I had put in quite a bit of Bitcoin shorts. So right around this swing high here at 27.1 to, let's say, 26.9. So put in a bunch of shorts, and these are all in slight bit of profit. I'm looking to increase if we get another bounce here. But all in all, definitely follow this copy trading account on Fairdesk, and I'll show you guys the full tutorial. So these are still pretty small sizes, but I'm going to be increasing these position sizes in the next few streams that we're going to do. So trying this out, let's see how this goes. Okay, and that's it for Bitcoin. And all in all, like Ethereum, just going to follow Bitcoin. And in fact, Ethereum is even looking a little bit weaker than Bitcoin. So let me just show you this really quick. So there is a pretty significant short-term resistance even on Ethereum, right around this 16.6 range. So you see here, the short-term range for Ethereum is between 15.6 and let's say 16.8. So 1680 and 1560. But you see, Ethereum has not been holding these range lows, and in fact, pretty significant higher highs and higher lows here. So lower highs and lower lows. So you see first lower low, lower high, lower low, and now this lower high it wasn't even a significant bounce going into FOMC. So most likely we're going to revisit 15.4 here, and most likely I think that will be broken. So obviously Ethereum is just going to follow Bitcoin. So going into the next couple months, if Bitcoin revisits 23 to 24, the consolidation range for Ethereum and the bottom line for Ethereum is going to be this wick here, right? Which is right around 13.6. So let's say bottom of this wick, and pointing to these consolidation ranges from December and from October 2022, yes. So if 1540 gets broken, I think most likely Ethereum could revisit 13.6, assuming Bitcoin goes to 23K. Is this highly likely? Again, I don't think the likelihood is that high, and the profit margins are that high for us to bet on this. So if you want to take a super short-term scalp position, I would wait for 15.5K, 1550 to be broken. So I would wait for here. I would wait for this level to be broken, then short on the retest and target 1660 range, which is the low of this wick. This is a short-term trade that I'm looking to take, and you can try to you can follow me on Fairdesk so you can directly get into this entry. But all in all, this margin here, going from 15.4K to 13.6 is only 11%. So is it worth chasing this absolute bottom here on Ethereum if you are a long-term holder? I don't think it's that worth it. So my long-term holding for Ethereum, I'm just going to accumulate anything between 1350 to 1550. That's going to be super good buy period. So I'm going to look to accumulate a lot of Ethereum in this price range. But a short-term scalp that I could potentially take is something like this.